Go ahead.
Good evening, everybody. Listen, tonight we're doing our second half of our financial podcast.
Yeah.
Thank you. Tonight I was just got it. All right. So tonight we're doing our second part of our financial podcast, and we're glad that you guys are tuning in with us. Continue to stay to the duration of this financial series that we're doing. So we want to enlighten you guys on different things that you can do as far as your finances goes or whatever. So we want to make sure or ensure that you guys have everything that you need to get started for a great 2025. So this is our financial series, and tonight my husband's gonna get started first. So we want to make sure that we go ahead and get everything going. All right.
Good evening, everyone. Like my wife said, this is our second part of our financial series. And tonight we want to focus on the home buying process. We know that's a big, probably the biggest undertaking that most people actually buy in their life. Their home
Yes.
is normally the biggest purchase, unless you're trying to buy like commercial real estate or something like that. But for the average consumer, your home is going to be the biggest purchase. 100,000, 200,000, $3. We're going to live like Puff Daddy, $1 million. It don't matter. Whatever home that you want to buy, your home often going to be the biggest purchase of your lifetime. So we want to talk about the home buying process and a couple of different types of mortgages as well. So we're going to go ahead and start. First of all, what is a mortgage? That's all you hear. I got to pay my mortgage. I have to pay my mortgage. What is a mortgage loan? Well, it's simple. A mortgage loan is a loan used to purchase real estate, often at the primary residence. Like I said, it's the biggest undertaking that most people actually buy in their lifetime. So loans can be used to buy investment property as well, and then also used as a second income.
Right.
So with a mortgage, the home and property is used as collateral. So remember that. So when you're buying a home, the bank or credit union will lend you the money, but for that home that you're actually purchasing, they're going to use that home for, collateral.
Right.
So eventually, if you don't make your payments, which I know you will, I'm just saying this for information's sake,
Right.
they can repossess your home because they're going to use that home that that they gave you money on to purchase as collateral. And if you don't pay it, like I said, I know you guys are going to pay your loan. We're just talking in general.
Right.
They can repossess your home. So normally for conventional loans, it requires a 3% down payment average.
Right.
Some people don't pay anything. Some people pay 5%. If you want to be froggy, you can save up more and knock your mortgage down and make your payment smaller.
Right.
So they allow you to finance a home, like places like Fannie Mae, government-backed agencies, FHA, VA, which is I love the VA, USDA, and other different places. So they back up your loan and often give you pretty reasonable or even incredible interest rates. So we're going to talk about home ownership tonight. That's in a nutshell what a mortgage is. The bank, Neighbor, Federal, USA, whoever you bank with, give you the money for a house. They use that house that you're living in as collateral. You make your payments, it's all good. If you don't make it for whatever reason, they can repossess your house, foreclose your house. Not repossess your house, that's a car. But same concept.
Yeah,
Foreclose on your house and take it back. Or you can do a short sale, but that's all another kind of deep into the weeds. But we don't want to get into that because you're gonna pay your mortgage.
Right.
So but they do keep it as collateral, so you don't really own your home. Before we go to the next step, I want people to know you really don't own it until you pay it off, because you're still making payments on it.
You still have
So don't get weary and well-doing. You got a 30-year mortgage, at 29 years you paid it, you still got 1 year left. Don't get weary and well-doing, and don't get weary and well-paying either, because they can get you that last year. So you don't really own your house, own it outright. You won't get the deed to it until you finish paying off.
Absolutely.
So my wife is going to talk about, what is a mortgage rate?
Yep. So what is a mortgage rate? So as we know, mortgage rate expresses the amount of interest you will pay on your mortgage as a percentage. So let's say, for an example, For an example, if you borrow $300,000 with a fixed 5% interest rate, you will pay $15,000 in interest by the time you pay off your home, unless you pay more towards the principal or refinance. So the whole thing for this whole game is pay principal payments. If you can afford to pay principal payments towards any of this mortgage bill, it'll cut you out, save a lot of money, so you won't have to pay that full interest rate on that 5%, or depending on your credit, that is how you're rated as far as your interest rate. So you want to make sure that you have good credit in order to get a very good interest rate. So when you do choose to do a principal payment, you'll be able to cut out a lot of that interest in the long run. So also, there's a variety of factors determine the current mortgage rate, which includes economic indicators such as inflation, unemployment, as well as actions by the Federal Reserve, which means the rates change each day, which is why most lenders post today's mortgage rates on their home pages. So you got to go by your financial history, which affects your ability to qualify for the mortgage, the best mortgage. So you have to keep all of those things in mind. So they're saying the best score to aim for a house is 740. So 740 credit score. That'll cause you to save most money, the money, that you're going to put towards this house. Mm-hmm. And it give you that good interest rate that you're looking for. So if you have good credit, you'll get a very good interest rate, which in long run will help you pay off your mortgage cheaper if you pay towards that principal payment.
And for those who don't have a 740, don't fear. Normally, the going rate or going score for a mortgage is 620. It's been that way for years. 620 credit score. 740 is going to get you the best interest rate. My wife just said you're going to save a lot more money. But 620 or above. But in some cases, mm-hmm. people have been getting approved under 620. Mm-hmm. So you had a 600, 605. I even heard of people getting a 590. I'm like, 590. I'm like, whoa, and the five's getting approved. Mm-hmm. So but keep in mind the higher your interest rate.
Right.
The higher, just credit score, the lower your interest rate.
Right. Mm-hmm.
Higher the credit score, lower the interest rate. Mm-hmm. And the reverses. The lower your credit score, the higher the interest rate.
Which means you'll have to put down a very good substantial amount of down payment. So keep that in mind with the lower credit score. So
you want to get your credit score as high as you can. Mm-hmm. And just a little trick. We learned. If you don't have the best interest rate and you're already stuck in your house, mm-hmm. you can refinance when the market is kind of down right now, mm-hmm. because it's a seller's market, not a buyer's market.
Right.
People are selling and they're very happy, but people are buying are kind of crying. Mm-hmm. So even if you got a good credit score, the market is not that great. Mm-hmm. People with good credit score getting 5, 6, 7%.
Right.
And back when I was good credit score, people getting 2 to 3%. Mm-hmm. So the market has changed. So you might want to wait and refinance, or if you don't feel like going through all of that, here's the trick. Mm-hmm. If you can afford, if you got $1,000 mortgage and you can afford it, you want to give yourself a real good interest rate.
Right. Mm-hmm.
Pay your regular mortgage on the first, between the first and the fifth, mm-hmm. or whatever your timeline designating your mortgage. Right. Mm-hmm. And then around the middle of the month, around the 15th to the 20th, mm-hmm. somewhere to that little period, if you could do another payment, whether it's $500 additional, mm-hmm. or if you feeling froggy, you want to double it,
right.
and you got the income to do it, mm-hmm. you will cut your mortgage down from 30 years to like mm-hmm. 12. It'll be under 15.
Right. Mm-hmm.
It'll be like 11, 12 years because all that interest is going on that first payment.
Right.
Whatever the interest is, whether it's 5, 6, or 7%, mm-hmm. is going on that first payment that's due.
That's right.
Now, after that calculates and goes through the system, mm-hmm. now you want to give it a gut punch with another payment, and that's going directly to the principal balance. It's coming down. If you got $150,000 left on that coming straight down, going down, down, down. Right. So there's no interest in that second payment. Mm-hmm. That's how you could give yourself a good interest rate if you don't have a good interest rate.
Right.
By making an extra principal payment a month.
Right.
So just keep that in mind.
Yep, and make sure you specify that amount is going towards principal payment, because sometimes they'll just accept it as a regular payment and then you find yourself just ahead on your mortgage. But that's not what you want. You want them to apply it to your principal amount, and make sure you tell the lender, I want this to go towards my principal allotted payment. So make sure you specify that when you send in those principal payments.
And how she knew that, we learned the hard way.
Yeah, we was too far ahead.
Thought we were paying our mortgage down, and found out we were 6 months ahead on our mortgage. It's like January. You don't owe another payment till September. We're like, whoa.
We're like, how that happened? Wait a minute.
What do you mean we don't owe a payment till September? Because they were taking it as regular pay, like my wife said.
Yeah.
They'll take it off March, April, May, June, July, August. We thought it was going toward the principal, but it was going toward extra months. So you have to call your lender and say, hey, I know I just paid January. This is for a principal payment for January. I'm going to pay February 1st again. But put this extra money, extra $500,000 on this principal payment.
Oh, yeah.
Yeah, because they will play crazy.
Yes.
And make it February payment, then March payment, then April. So you don't want to, we learned that the hard way. So
Yeah.
we're telling you
Don't be like me thinking, because miracles happen now. Miracles happen. Somebody was generous enough to pay our mortgage on top of our principal. Hey,
Yeah.
I was having a good time. Hey, glory. And then come to find out, you 3-4 months ahead. Like, what? What you say? Oh, okay.
No. So we actually thought we were paying our balance down, but we was just so far ahead. So they was getting that payment and charging interest to it.
Right.
So that's why you got to call them and say, no, don't do that. And also, it's not mentioned tonight, but we do sometimes do owner financing for certain situations.
Right.
So I just throw that out there as well.
Right.
Owner financing, but remember, if you will make an extra payment, call the lender.
That's right. That's done.
So the next thing we're going to talk about how to apply for a mortgage. You know, of course, you're going to need some things to apply. You're going to need some documents. First thing you're going to need, is an application, of course. You're going to have to put an application in. You're going to have to, fill it out. You're going to have to get them bank documents, bank statements. Your credit history is big. Employment documents. You need a lot of stuff.
Right.
There's a lot of different things that underwriters going to be calling you about, to emailing you about. You're going to need all these, any investments, all of your debt, how many credit card debt you got, how many cars you have, what the debts on those. You have to give your whole history.
That's right.
Because the underwriter's going to take all that into consideration, and then they're going to determine your interest rates. So you have to apply for it. So normally, the lender must provide a loan estimate within 3 business days of your application. You apply, and they give you a loan estimate. This is a legal document, that people take to the real estate agent. So, like pre-approval. People get that pre-approval, but it's not really full approval.
Right.
It's pre-approval. Keep that in mind too. We learned that too.
Yep.
It's just pre-approval.
Yep.
You pre-approve for $350,000 at 5% interest rate. So you take that to the real estate agent.
Right.
At least they know that you're serious. So they'll show you all the houses in the world.
Right.
But when it's time to finally close, you thought you had 5% or 3%. Now it's 4.5%. You're like, hey, we're up to the 3.
Right.
It was just a pre-approval, Mr. Anderson. So now the rate went up, or it could go down,
Right.
which you wouldn't cry about.
Right.
Or it could require a down payment, more or less. It can go either way.
Right.
But most of the time, it pretty much stays in that same gender, that same area. But just remember that apply for a loan, application, you need your social security number, birth date, all that kind of stuff. You need your bank documents, you need your proof of income, whether you got working at a job, or you're working with yourself, tax return, all that kind of stuff. You need everything. So the underwriter's going to be asking for everything. We actually told them that we got our house at a kind of crunch time.
Right.
We got like in the first part of November, 5th or somewhere, But we wanted to be in the house before Thanksgiving.
Right.
So we said, can we do a 15-day closing day? We don't want to do all this 30, 45, 60-day closing day. We want to do it in 15 days. And they were sending us stuff back and forth. And we actually closed in 12 or 13 days.
Right.
Because we were sending our stuff in so quick. So you can't close fast. Don't let anybody tell you that you have to close 30, 45 days. If you want to do it faster, you can. You just got to communicate with your lender. So that's pretty much how you apply for a loan. But like I said, make sure your credit's right. Make sure all your documents right. You don't got no fraud in your taxes, because you got to send your tax returns for a couple of years. If you file bankruptcy and all that kind of stuff, you got to make sure that's been discharged.
Right.
Send proof that it's been discharged. Got any court filing. Still look at your student loan debt. They look at everything. Every debt that you have. And if you forgot something, trust me, they will call you out. We see your Capital One back in 2017. What happened to that? I didn't pay it. That's what happened, sir. Are you going to pay it? And if you got any collection or anything that popped up at the last minute, guess what you got to do?
You gotta pay it off.
You got to pay it off. Pay it off. And then they can move forward. They'll pause for a second if you can pay it off. And after you pay it off, you got to give proof. And it just keep going.
Right. And see, another thing that they do, as my husband was saying, that as your different things that's on your collection that may be hindering you from getting that house at that time, like he said, they'll take a pause, but they'll also give you instructions on how to go pay it. And then they'll redo the mortgage calculator over, you know, so as you're paying off whatever it is that they're saying, okay, this particular bill was hindering you. But if you pay it off, it'll give you this type of score, this many more points towards, you know, your housing option. So as he was saying earlier, your interest rate can either go up or down. So keep those things in mind. So as you're going through the housing process, you can also remember to make sure you listen to what the lender's telling you as far as your credit goes. Because if you have any discrepancies on that credit report or whatever, they can help you get some of that stuff off. They'll give you instructions on what to do at that moment. If you go ahead and take care of it, make sure you talk with those lenders and ask them, okay, so if I pay this whole thing right now, will you take it off of my credit report? Get it in writing. Let them know this is what I'm doing and I need for this to be off of my credit report. They're in agreement with it. It'll be off. And go back to your lender, let them know, and then they can recalculate the whole process, you know, as far as that calculation for that particular loan.
Because how can they do that so quick? Instead of waiting 30 days for your score to update it, Credit Karma, TransUnion, Equifax, Experian, whatever, because they have a tool where they know where your credit would be. Like you got some collection, got you at the last minute,
right? And
your score dropped, and they said, "We need you to get this collection off." What's the hospital bill? Chris Conner got me again. Shout out to Chris Conner because he will get you.
They will get you.
But if you pay them off, they say, "Okay, sir, your score gonna go from 675 to 725." They already know what your score is gonna jump to when that is off. I don't know. They got a magic wand. They got some kind of not a magic wand. They got some kind of system where they know where your score is gonna calculate at. That's how they say, "Oh, once you pay that off, you're good to go." So they will help you. As my wife said, they'll tell you how to pay it and when to pay it, and they have to negotiate it because they want you to sell that house.
Right.
Building new houses and not putting people in it is not a good business practice.
Right.
So that's how you apply for a mortgage.
So next up, how does the mortgage loan process work? We just did that, right? So how does this work? All right. So once you submit all the supporting documents, your loan will enter into what they call the underwriting process. So with the underwriting process, this is what you got to do. Make sure you do not go and open up new loans. Do not go open up new banking accounts, or do not go and make new purchases or whatever. Right now, in your mind, you should have your banking account on a freeze, kind of, sort of, because you want to keep whatever it is, the amount that you have in your banking account at that time to remain until the whole underwriting process is done. Because if you start doing something different or new, it's going to cause your underwriting process to be put on a halt, because now you got something else going on and they're like, hey, what happened? You know, so you don't want to cause something to happen during the underwriting process. So listen to everything that the lender is telling you to do during this process so that you will not cause that loan to, pause. So you keep that in mind. So the lender will check to make sure you have all the credit and income to repay the loan and confirm confirm other aspects of your application. Of course, they're going to go through this thing like a fine-tooth comb. So keep that in mind when you get ready to close. So the lender will also verify your down payments and funds for closing. So during that process, if you have to put down a down payment towards your closing costs or whatever, just be reminded that also causes your mortgage to be cheaper. Also, the more you put down, the cheaper the mortgage would be. Yeah, mortgage payment would be. So keep that in mind. And then sometimes on the back end, like what happened to us, which was like we was excited about it because we didn't know it was gonna happen. Instead of us having to put down a down payment, they gave us money. They gave us a good penny too. So you just never know. So when you find yourself in the right ball field and listening to exactly what the lenders are telling you to do during this process, you'll come out on top. So make sure that you listen closely to what they're saying. So also the underwriting agent will confirm the source of large deposits in your account and confirm that you have cash reserve, which means if 6 months out payment, that just in case you lose your job or whatever, they want to make sure that you're still able to pay for this house even after you get it. So have some finances on reserve in the account that they can account for and say, okay, I see that if something should happen right now, after receiving these keys, they at least got 6 months to a year worth of income that can take care of their mortgage. So they'll be good with taking over this mortgage. So keep that in mind as well. So they'll confirm all of that stuff. So many lenders also require savings at least 2 or 3 times your monthly mortgage, which kind of what I was saying, in your reserve to complete the underwriting process. Also during the mortgage application process, the bank will order an appraisal of the home. So when you get an appraisal for your home, this is something you yourself have to pay out of your pocket to get your home that you're looking to buy appraised, because you want to, of course, know if there's anything wrong with the house before you actually purchase it. You also want to know, just everything that's going on with the house.
Could be wrong.
Yeah.
What needs to be fixed.
Exactly. What needs to be fixed and all of that good stuff or whatever. So, and then the real true market value of that house, you can also find that out as well when under the appraisal time, because sometimes they'll try to overcharge you for the home, and when they do the appraisal, it can actually be cheaper than that, So that's why it's always good to get an appraisal, but you can opt out of that appraisal. But I wouldn't suggest that. I wouldn't do that, because sometimes you might go into a home blindly, and then to come to find out that there's so many things that's wrong with that particular property, and then you got to come out of your pocket. So you don't want to do that. You want to go ahead and invest in that appraisal amount to pay to get that house appraised. Okay.
And while my wife was on that point, I want to make a point. A house that we were looking at buying before we bought this house.
I was going to mention that, yeah.
The reason why you won't get an appraisal, because it will show you what's wrong with that house. And my wife said, we didn't know that the person who was in that house was getting booted.
Divorce, yeah.
They got divorced, but I wasn't too worried about that. I'm sorry to hear that. But they got booted. They got the foreclosed in the house. So they had to go. So in a bit of anger, these people poured concrete down the plumbing.
Broke the garage
garage door, messed up, did things in the
water
room.
faucets out the house, outside.
But the main thing was that plumbing system was jacked. It would have cost like $5,000 to $7,000.
Right.
Even 10 with the wrong person. How we gonna look at under the ground and see what's going on with the plumbing?
Right. We wouldn't have known.
We would have gotten there and tried to turn the water on and enjoy it. Nothing would have happened. $10,000 bill right out just moving in. But the appraiser found that.
Right.
So that saved us. We were like, oh, sorry, buddy. We moved on from the house. We got a new house.
Right.
We said, we're not dealing with these houses nobody lived in. We wanted a new house after that one, because people are upset and angry, and they tore the house up. Sabotage the house. So be careful about that too. So we just decided to just go with a new bill.
Right.
So nobody can pour anything down, nothing in this house.
Yep.
So just be careful. You buy a used house, a house that's already been pre-existing house, make sure you get an appraisal, because the new house has got all the stuff with it, but it's brand new. You got all the appliances, still got the tags on it and blueprints and all that stuff. But if you got a pre-existing house, make sure you get an appraisal to see if that roof is good, They can put some shingles on top of some bad shingles,
Right.
and your roof still need to be replaced. Let that appraiser go there and double check everything.
That's right. Absolutely.
And what my wife said, another note about the funds during the underwriting period, please act like that money is not even there.
Right. Please
Like
do.
we're going to reiterate that.
Yes.
Just leave that money set aside for closing costs. The money that say you should have set aside for closing costs. And if you got to pay a down payment, not everybody pay a down payment.
Right.
If you got to pay one, act like that money do not exist. What we did was we took out some money because we did a quick closing.
Right.
We did a 15-day closing, which we did in like 12, 13 days. But we took out enough cash
Yeah.
and used cash for everything. We didn't even use our cards.
Right.
We didn't even use our debit card or credit card. We just used cash for gas, food, eating out, everything we did. We just used cash because they want nothing to take that balance down.
Right.
And that will cause your underwriting to call you and pause the whole operation.
Yep, and you don't want that. So also, they want to make sure its value exceeds the amount of the mortgage loan. And also, you may also want to have, like we just talked about, that home inspector, the evaluation of the property. Definitely do that. So as you know, some mortgages such as FHA loans require the borrower to get a home inspection. So just know that some of the lenders that you're going through, like we just said, FHA, they're going to require, so it's going to be like, you got to have this done. They're going to require you get this appraisal, get that inspector out there to appraise it. But there are some that are leaving in your hands now. They'll say, hey, it's up to you. You know, but like we said, we do not advise you not to get one. We advise you to get one because you want to make sure that that house is in tip-top shape, that you don't have to go in and spend out more money than you anticipated spending out on top of, in case you had already paid a down payment. You know, you don't want to have to go into that house and, you know, have buyer's remorse. So you don't want that. So of course, 3 days before the scheduled closing date of your mortgage, the lender must provide the closing disclosure. So they're going to read every single thing to you, page by page. I don't care, it's going to take a long time, but they're going to read it page by page so you can clearly understand your rights and they'll, you know, make sure you understand that what their rights are as well. So this legal document provides the final terms of the loan as well as the total closing costs. And then if the closure meets your expectations, you make your down payment at closing costs at settlement, where you will receive the keys and take ownership of your new home. So make sure you stay the course during this process.
And what my wife and I were talking about was it's an inspection. We kept saying appraisal by, I was slipping the tongue. It's an inspection of the home, but the appraisal is, you're going to need both of them. I'm going to clarify.
Okay.
You're going to need both of them, appraisal and an inspection.
Right, okay.
So what we're talking about, when you're talking about checking the plumbing out
how much money
and the
you
roof,
spend.
that's an inspection.
Right.
You need to do that now. You can do that when you want to, like we said, but we recommend.
Right.
But the bank is going to make you get an appraisal because they want to make sure they're not giving you $300,000 for a house that's worth $150,000.
Right, exactly.
So they're gonna make sure that house is worth $350,000 or more. Why? Because they're making money. That house is gonna be worth $350,000. They give you about $300,000. That way they already got $50,000 off the top.
That's right.
If you don't pay it, that way the bank made money. Remember, the bank is in business to make money.
That's right.
So
Absolutely.
if you don't pay it, they came out on top. You win when you pay your mortgage. So, but the bank, you have to get an appraisal, which somebody gonna come and inspect the house again. But they're gonna inspect to see what the value of it. But the inspection gonna be going through the roof, the plumbing,
Right.
and all that kind of stuff to make sure your house ain't jacked up.
Right.
So you don't want to buy a jacked up house.
That's true.
Now the last portion we're talking about, gonna talk tonight, is the types of mortgages. Types of mortgages. The conventional loan allows you to borrow a certain amount with a maximum minimum credit score, normally around 620. Like I said, that's the magic number, been there for about 10, 15 years. 620, 620. Some people can buy with less than that, depending on what kind of loan it is. I know USDA loan and FHA and sometimes VA loan with the veterans. VA, thank you so much. Can let you sometimes get a loan. I heard people get a loan in the high fives or low six. But try to get it above 620 and above. If you get it over 700, like we recommended earlier,
Right.
740, you're going to get the top knot interest rate
rate.
that's out there going to save you money in the long run.
Right.
So, you know, conventional loans, you must have a down payment, I think 3% normally. That's normally. Not everybody pays the down payment.
Yeah.
We didn't pay down payment, but some people had to pay it.
Yeah.
You know, most conventional loans have a 15 or 30 year loan term. Some got 20, but most times it's 15 or 30. If you can afford the 15, that's great. The payment's gonna be higher. If not, do the 30 and just make extra payments. So in case something happens, you're not stuck with the higher mortgage payment.
Right.
So you can still make your 30 into a 15 or your 30 into a 10.
Right.
Like if you do what we said earlier, make a principal payment after you made your regular payment. You can knock your loan out under 10 years if you want to.
That's right.
We can show you how to calculate it. Make a regular payment, then make a principal payment. So that's a conventional loan. They require a high credit score and a down payment of at least 10% normally. I'm gonna keep saying normally.
Normally.
Everybody don't have to pay 10%. Some lenders say 20. Some say
Depends on your
5.
score.
Yeah, it depends on the lender too. So that they kind of split in the middle at 10%. But I heard of some lenders ask people for 20% down payment,
Right.
and some asking for 5. But so the normal rate is somewhere in between the 10% down payment. So that's a conventional loan.
All right. So FHA loans allow a credit score of 500 with a 10% down payment, a 580 credit score with the 3.5% down payment. So these loans have a guarantee from the Federal Housing Authority and can be used to fund both home purchases. It also goes for renovations if you need those renovations done. So mortgage rates, FHA loans fluctuate with the market like other types of loans as well.
That's right. So that's the FHA loan. So I like what you said. FHA give you an option. 500 credit score. 500 credit score.
500.
500. You can't even get a credit card. They'll laugh you out the bank with a credit card. But you with an FHA loan, 500 credit score with 10% down payment. If you can save some money, they got bad credit, you can get an FHA loan.
Yep.
Or 580, move up a little bit with 3.5. So notice that
Right.
the higher your credit score,
The
the lower the amount they requested for the FHA down payment. So it pays to have a high credit score.
That's right.
My loan, my wife's loan, our loan, VA loan, Veteran Affairs. They thank you for your service too. VA loan backed by the Veteran Administration provides zero down payment for mortgage eligible veterans, service members, and spouses. It's easy to compare home mortgage rates to the VA loans on the web. So VA say you don't have to worry about no down payment. Veteran, sergeant, lieutenant, colonel, petty officer, airman, whatever. So VA does that for you, and they give you the best interest rate, and they back your loans for you. So you're a veteran, get your benefits, and let them know that you're a veteran. Get that DD-214,
Right.
and they will back your loans. That means if you fall on a hard time, the VA will help you out. They will give that. They'll fight for you on behalf of your mortgage company, and they will sometimes give you a year, 6 months, a year. I heard people get almost 2 years. Loan modifications, and because the VA backs your loan for you, so it's like a co-signer. You won't look at it another way. Just look at it as the VA pretty much co-signing your loan with you. So the VA is gonna make sure that lender, and that lender already know how the VA rolls.
Right.
So we got a veteran. He having a hard time. I know the VA not gonna let me get away with just putting him out foreclosing. They won't. The VA gonna fight for you, and that company gonna have to go through a floodgate just to get you out that house. Trust me, I know some veterans who have some hard time,
Right.
and they have 1, 2, sometimes 3 loan modifications, and it's still in their home.
That's right.
So the VA backs you up. So if you got VA benefits or you're a veteran, please get your DD-214 and go through the VA process when you get in your home.
That's right. Easy peasy. Yep. So SDA loans, the SDA loans also has a non-down payment loan program. SDA.
USDA.
To qualify for this type of mortgage, you must buy a home in a rural area. So you got to go to the country, but it's worth it. You won't have to pay a down payment. So the USDA mortgage also has a maximum income limit depending on your family size and the zip code. So like other loan types, rates can vary. So just keep those things in mind, that the USDA loan has no down payment payment plan. And also you can get this home, but you have to go into a rural area in order to obtain this particular loan?
So these four type of loans, conventional loans, 15 and 30 years, require at least 10%. In some cases, sometimes 20, sometimes 5, depends.
Right.
You know, FHA loans, either 500 credit score, 10% down, 580 credit score, 3.5. VA loan, no down payment. VA backs your loan. USDA loan, no down payment option, but you got to live in where people at get out stay at. So just don't be sitting there in the get out mansion, but you got to live in the woods.
Right.
They want you to populate the woods. That's the purpose of that loan.
Right.
They don't want you to be in New York City. They want you to be out there where the Texas Chainsaw Massacre at. Out there in the woods by yourself on 5, 10 acres of land with nothing but trees and bears and deer. So they want to populate those areas. And some of those states like South Dakota and Oklahoma, where not that many people live, North Dakota, they really want you to, they almost paying you to stay there.
They paying
because they
money
want
for you to
pay, they want you to live. Just live.
in those rural areas.
Populate the area. They want you to populate those areas. That's why the USDA loan exists.
That's right.
So, two things I want to just mention at the closing is something that can help you get your loan approved fast is to get that down payment up, save up some money in case you need a down payment, save up some money in case you need a down payment. Income tax coming, you want to get a house, save that income tax, and hold on to it if you want to get a house this year.
Right.
And get your credit score up as high as possible. If you can get over 740, you will be sailing with the best interest rate out there.
That's right.
So do yourself a favor. Your credit is jacked and whacked right now. Unjack it right now. And then let it stay for like 6 months or so and make sure nothing is popping on there. And then you go ahead and move on with your mortgage. Home ownership, like we said, is often the biggest purchase that most of us are going to do. Unless we want to buy a hotel or convenience store or some commercial property. But home is a good thing.
Yeah.
And you're buying your own home.
Right. And just remember too, to do your homework, research all of these different lenders, read the reviews concerning all of these lenders. That way you can determine which lender you want to go with according to your circumstances. And also, again, read those reviews because the reviews do not lie. People will tell you the God honest truth about who and what happened during their loan process, why they weren't satisfied, or maybe they'll give them thumbs up. So make sure you always read the reviews for anything that you're trying to purchase, because then you get a better outlook of whatever it is that you're trying to do. But make sure you do your homework.
And we have turned down companies because of the review.
Yes.
Everything that we tell you guys, that's what we did.
Yeah, we've done it.
We bought rental property before, investment property, and we bought our home. We went to both phases. People will tell you the review, timeshare, all that kind. People will tell you the reviews, and trust me, they have no reason to lie. Oh my God, they just ripped me off. Frank from my real estate just told me I had 5% when I signed the paper for 12%. I'm never doing business with this company ever again. We find somebody else.
Yep.
And no, that's what we did. So read the reviews, and my wife said, do your research. Don't be lazy, just get the first one, because the first one might be, a sham company.
Might go out of business the next day after you done closing. Now you're stuck with something.
Or get your down payment and then go out of business. You don't get the keys yet. So just be very careful not to get sham.
Right.
And just be very vigilant. Because people are some scammers out there. So just don't go with the first one.
That's right.
Do your research. Do your homework. Save your money. Build your credit. Find your neighborhood. And another little tip.
Oh yeah, good talk.
About when you want to buy a home, this is what we did.
Yeah.
It's just the Anderson, the coffee drinking, sipping Anderson. Wherever you want to live at, try your best to visit that area if you're close by at night on the weekend. Don't worry about Tuesday night. Most people have a Bible study or some Wednesday night. Don't worry about those weekdays. Don't worry about that. Friday, Saturday night, sometimes even Thursday. I'm talking about late. I'm not talking about no 6 o'clock.
12 midnight.
We rode around this area. We decided we were going to get this house in New Bill. We rode around the subdivision about 12 o'clock. I want to see if any ladies of the evening was walking around. I want to make sure there were no people with crack pipes walking around. Nobody with blue or red walking around. I want to make sure none of that was going on. Because if we weren't buying a house, we saw that. at nighttime gives you the true story of your neighborhood. Not during daytime when days of our lives are on, everybody at school, work, or sleep. Go visit your area at night on the weekend, 11, 12, 1 o'clock in the morning. You can stay up there late. And if that place is quiet, then you got you a very good neighborhood. Our neighborhood was so quiet, I almost fell asleep right around here. I'm like, man, I like this neighborhood. Nothing going on Friday night, 1 o'clock. It came back Saturday, 1:30.
Day too.
Quiet. Go back in the evening time. Quiet. I love it. And right now, I guess it's been almost 7 years. It's still quiet. So that's how you want to test your neighborhood. You don't want to go up there and see, Tupac, and jungle with bandanas tied around their head, or people walk around with white sheets with crosses. You in the wrong neighborhood, buddy. Burning crosses in the next door neighbor yard.
And we even researched how much crime happened around the area close by where we live, because that also makes a difference too, whether or not your what you call it, it fluctuates.
Oh yeah, property value.
Your property value, whether it goes up and down because of the surrounding parts of where you live. So also look at those variables also when you're researching, doing your research too, because you want to know about the crime that's happened on the outside of your community, whether or not it'll affect your where you live at. So make sure you do that as well, because that's very important.
And check out the school system if you have
Definitely
school-age kids.
system. Yes.
Your kids going to a horrible school rating. That might be a factor to not want to move there. Move to a place where your kids going to get a good education. So
that's right.
School system and crime was very important. I didn't mind the commute. When we moved to our house, I was driving an hour and a half one way to work. So I don't mind the commute. Just long my family's safe and my kids got putting something in their head. So, like I said, I didn't mind that part. But now I got a shorter commute, thank God. But look, some people look at the commute for their job too. I wasn't worried about that part, but the commute to your job or business, school system, and crime rate.
Right.
So look at those areas, because you might find a good house. But like I said, what good is finding a good house in the next door?
Yeah.
I just see some people out there burning a cross next door.
Right.
I might not want to live next to them. I'm the wrong neighbor for them.
Right.
Let's go to another neighborhood where when people carrying the cross, not burning the cross. So I'm in the wrong area for that one. But you will find out at nighttime. You will find out at nighttime on the weekend. So we just thank you all for joining us tonight on the home buying process. It's a good thing. Trust me. It's nothing like home ownership.
Yeah.
It's nothing like you rent so long, you never own it. Then somebody want to put you out there and cancel your lease, and then you're out. You can be there 20 years.
That's right, absolutely.
But buy your own home, save your money, and as far as our people, black people, I'm just gonna say it, black people. I'm trying to be politically correct. Black people, let's start buying our own home.
Right.
We don't have to live in the projects our whole life. We don't have to live in trailer parks our whole life. We can live in our own home. Just gotta take the steps. Get you a career with the funding. Get your credit right. Get your down payment right, and you can own a home where you can call the shots.
Right.
Nobody can put you out of your home.
Yeah. And surprisingly, your rent that you're paying right now on some of these properties that you may be living in, your mortgage can be cheaper than that.
Most time it is.
It can be cheaper than that, depending on your credit. So keep that in mind, that just because you're trying to purchase a home does not mean your mortgage is going to cost more than where you're renting at.
That's right. And every time you make a payment, you're going one step, 1 month closer to ownership.
Yeah.
When you're doing it in a rental place, you're going 1 month, the same month you were last month, the same month you're going to be next month. You're never going anywhere closer because you're never going to own it.
And the longer you live there, you don't bought that house 2 or 3 times for the people who own the house.
And we are landlords too, so from that angle, thank you very much.
Yes.
Thank you very much for buying our house 2 or 3 times, because we had rental property.
That's
but
right.
we don't want y'all to do that.
Right.
We want y'all to be landlords too. Unless somebody just buy the house 2 or 3 times.
Right.
But own your house, own something.
Yes.
So if your kids ever need to come back to a place, they have a place to come to.
That's right.
If your grandkids need to come back to your place, they have a place to come to.
Yeah.
So own something, people. Please.
Yeah.
Own something.
Even if you have to do this, because what we found is this. It's cheaper to do it too. If you purchase your own land first,
Yep. Good
then
point.
you go try to buy a house, it's cheaper. That package is cheaper for you to purchase a home when you can put it on your own land.
Good point. Baby.
So
Good point.
so get you some land if you want to start off with land first, then come behind with the
Yep,
house.
Yep.
It will cause you to be cheaper for you to do that.
Very good point. My very the financial advisor. I forgot that point, but she remembered that point. So good job. So buy your land first, and it's much cheaper because you're buying on your own land. Your land is your collateral,
Right.
for your down payment, all that kind of stuff. Because you're buying on your own land, so it's much cheaper.
That's
and you don't have. We live in a subdivision. I love my neighbors, but maybe one day I don't want to look at neighbors. I might just want to look at some deer and some trees and some flowers. So for those who want to go buy their land, y'all gonna be doing very well.
And it shows responsibility.
Show responsibility. So stick with it. Let's go ahead and get to a home this year. If you're not a homeowner, don't worry. I don't care if you're 40, 50, 55, 60. You still can get a home.
That's right.
And like I said, not just for you. It's for your children, grandchildren,
Your
other family
Your
members.
legacy.
Your legacy. So just look at that. So we thank y'all for joining us tonight. So you don't have to join us. We appreciate y'all could be doing something else.
Yes.
But we thank y'all for joining us at our home workshop.